welcome everybody. Happy New Year. As we are, the last day of 2025. Incredible. It came so fast. So thanks for tuning in. Today we have a special guest. It's also pre-recorded, which I'll be playing for you shortly here. But so Myer, who you all know, I'm sure, from past episodes here with us, but also the Myer Show on phoneboothpodcast.substack.com. Please do subscribe. Um, but had a great conversation. He introduced me to a friend of his, Sunny, who's a real estate agent and very well versed in um, economics, both domestic and abroad. He is in Canada as well, along with Meyer. But anyway, so it's a great conversation about different economic trends and wins, etc. So a little different than the typical conversations, which is more of a kind of philosophical and deep that we like to have here. But it was a good conversation still, and I really appreciate Sonny and his insights, and I hope that you do too. But anyway, so without further ado, I'd like to um, introduce you to Sonny. Enjoy. All right, so as promised, here we go, guys. We got them, as you all know, Meyer here, who's been with us before, and he introduced me to his good friend Sonny. Sonny, welcome to the show, sir.
Thank you. Thank you.
It's a pleasure to chat with you. So we were chatting a little bit pregame here, and we're like, hit record, because you were sharing with us, or you were about to share with us some of your real estate experience and what you see coming. Meyer and I have been talking about doomsday coming in the real estate market, and this silver explosion we've been seeing. We've been talking about coming already for a long time. So tell us your perspective and what you see coming from a real estate perspective. And yeah, let's. Where do you,
All right.
where do you
Yeah,
want to go?
One
yeah.
sec, one sec. Before you do go on, just so everybody knows, give us a little introduction of who you are, just so
Good
everybody
call.
understands your background. Because
Fair
it's one
enough.
thing to give us info. People know my background. People know his background. Give us your
Fair enough.
background. What's your background,
Well,
Sonny?
I
Thank
mean,
you,
in the
Meyer.
dig
Good call.
in the digital world, I don't really got much of a background. You know what I mean? I don't really have a podcast or Twitter or anything like that. Uh, but yeah, my name is Sunny. I live in the GTA, real estate agent. I like investing. I'm big into economics, global economics. Um, I have a political science background, so I know a little bit about the politics.
Okay.
I don't really try and get into the micro aspects of things. That's when I say micro, I mean like day to day, like human to human
Hmm.
interaction and that kind of stuff. I can get into that, but when I do, uh, my main focus is kind of understanding a lot of the macro, and then through that you'll understand what happens on the day-to-day level. So for example, inflation, right? We can talk about that. We can talk about why the housing prices are going down. It's not that the housing prices just go down like just like that, right? There's a reason and logic behind it, right? So we can have a
Absolutely.
discussion on that. So a little bit about that. So 15 years, 16 years in real estate, Toronto real estate market. Um, I you won't see me or hear from me much. My advertising hasn't been that strong, but I'm a door knocker. That's my main focus. And I think that's more
Old school.
beneficial. Yeah, I'm very old school, and I think that's beneficial because when you go to advertising on a digital level, more or less, it's hard to get everybody's take on what real estate's about. When I go door to door, I talk to every single human being,
Yeah.
and I
Yeah.
basically, we're having a 10-second discussion about real estate. We're having a 10-minute discussion about real estate.
Yeah, that
Where
one-on-one
are,
makes a
and
difference.
that makes a huge difference. And that makes me understand what's really actually happening on the ground level. And you have to understand that, like, look, I'm only one person. I can't do Richmond Hill and Kitchener and Brampton and Mississauga. I can't do all of them doors. There's no way. But I'll tell you right now, more or less, I kind of go into I did a lot in Brampton, which is the hood. I'll be honest with you, in GTA. I mean, I know you're out in the U.S. and Myers out and up in the with the Italians and the Russians, but
Oh.
um, I mean, when you're with the Italians and Russians, I'll be honest with you, you're a little bit farther ahead in the game than others. But um, but nonetheless,
I appreciate that.
nonetheless, being in Brampton and Mississauga a little bit. I'm out in Georgetown as well. I get to see the power dynamics and the shift between,
It's
upper,
true. It's
middle, and
true.
lower class. You know what I
You
mean?
get you get a
Yeah.
way better perspective in
Yeah.
overall viewpoint.
Yeah.
100%. That'll give
So
you.
yeah. So now we talk about the K-shaped economy. And at any time you can ask me a question or stop me and be like, you know what, let's diverge and something else. But the K-shaped economy is a big discussion right now on Wall Street and
Can I
all
ask
this
you a
stuff,
question
right?
before you continue?
Go ahead.
Just out of curiosity, you hear us on what? A headphone? Are you listening to us on a headphone right now?
I have my
Okay. I, I
bud
I
in
was
or
hearing a
whatever.
little bit of an echo. That's all. All right.
Oh, sorry.
Cool. Continue.
Am I good?
No,
If
you're
you
good.
have to tell me to change, I can put it on speaker or
No, you're
whatever.
good. You're good. You're good. You're
Okay.
good. Sorry. Just want to double check.
That's okay. So, they're talking about the K-shaped economy, right? K-shaped, basically 10% of your economy is the wealthy people, and the other 90% are just gonna be they're going down, right? Draw a K, one's up, one's down, right?
Yep.
That's especially with the AI coming into and whatnot. You're gonna see
Absolutely.
replacement of jobs and stuff. Yeah, actually, they only yeah, it's replacement. I think that I have my own take on the AI, which I really don't want to discuss right now. I think more Canadian real estate. So, give you an example, just because it's hot on the hot off the burner. I literally just an hour ago, I just said goodbye to these clients that came to my place, and I'll be honest with you, they're my landlord. Now check this out. This is pretty impressive. I mean, I'm a tenant. Okay, I rent, right? Now some people like you're a real estate agent, but you rent. Well, I've also owned real estate too, right? Well, I not multiple, just my own house, primary residence, but I liquidated it. I sold it, and
Yep.
I closed my deal in January of 2022. The market in Brampton, specifically the Peel region and the GTA, most likely Toronto and the Peel region, 416905, sorry. They both peaked around March and April. Okay. So I almost timed the market as perfect as you could ask. All right. In regards to Toronto real estate market and in past 20 years, okay, 20 years, um, nobody's been able to figure out this Toronto market. It only keeps going up, right? And so,
What
you
year did
know,
you sell your house in?
January of 2022 was my closing,
Okay.
and the
Gotcha.
market peaked in the 416 and the 905. You can check the data, whether
That's
it's
right.
even 50,000 or 20,000. The market started only declining, starting.
After that May. That May.
Yeah, no, not May. It was
Yeah.
March and April because the first interest rate hike was,
Interest
I
rate
think,
hike.
in March or April, right?
Yeah.
If you can chat GPT it, but
Yeah.
that's what I love about the AI, right? You can't go wrong anymore. So, um, you know, so the K-shaped economy, we can discuss on that. But real estate, I have these clients. I'm a tenant, okay? Um, and the landlord is now coming to me and saying, "Hey, I'm gonna share with you my portfolio. I need to liquidate because I'm getting underwater." So that's a big deal in my eyes because, where do you see a landlord uh, rent out their investment property to a tenant and then hire that tenant to now liquidate their entire portfolio, which
In a
you know what I mean?
K-shaped
Which is this.
economy.
So,
That's crazy.
so now you have to understand that some of these people have built this wealth for 10 years. It took, I have an example of an African came to the country in Canada, probably in 2010, probably had 10 grand, 15 grand saved up, bought a house, right? Put a down payment of 5%, 20 grand, whatever it was, bought something for 400,000. And then over the span of 10 or 11 years from 2010 to 2022, made about, $1 million, okay? Selling and buying real estate because everybody made money. It took one house that he bought that he now lost all that million. And
Wow.
it's
Wow.
same and exactly, I have stories like that. And so these
Yep.
people, these landlords, I don't need to say names, but this landlord, they must have saved 600,000, 700,000, whatever it was, and now they bought all these properties, leveraged themselves to the tits
Look,
like
I
everyone
was
does.
telling you,
And
Sonny,
now
it's
I
coming.
already know. And now they have seven properties. One is their own property they live in. The second is this property that I live in theirs, right? So they have five more properties that is all underwater. All underwater.
Oh,
I
it's
can
so
guarantee you.
sad.
There's one property. that, let's just hypothetically say their mortgage is 500,000, and I could probably sell their property for 600,000. So they'll have 50,000 after commission, or 70,000, or whatever closing costs might cost, but they'll
Right,
have
right.
minimum 50,000. Every other property, if they have a $700,000 mortgage, the property can only sell minimum for 680. Then means after closing costs, their downfall is 50,000. So
Yeah,
they don't have 50,000, and you times that by four, that's fifth, that's 200,000 underwater.
yeah,
And the problem with that is that some of these people are leveraged, so they got private mortgages to maintain. So these private mortgages are only 1 year terms. And so they renew every year with a 2% now, because private lenders are now getting smart and greedy. And they're saying, you guys are stuck. You can't go anywhere else. Come to us, charge us 2% on your loan. It's 500,000, $10,000 I want. You'll never see that money again, but I will
yep,
just, that's your fee, lender fee, you know what I mean?
yep.
And so
Two
the
two points up front. Yep,
Yep. So 2 points up front, and then we'll give you a loan still at 12%. And so these people now have to come up with renewal by April. So now it's January 1st. What do? Now you have to sell the property. I have to put their house up for sale. Now I have to take this into consideration, but I'll have to do my homework. I'm already telling them you have to drop your price currently 7% already. So if you're 700,000 or 750, you drop it, you got to go to 680. They can't accept that. However, that's what I have to start off with,
yeah.
and then run your numbers, because that's where the market is headed. I'll be honest with you. I'd love to hear, your take a little bit. But like I said, I sold, I got out of the real estate market. I think commercial real estate in the GTA is a much better proposition than residential real estate. And I'm saying that over the next 10 years. I think after 7 or 8 years, sure, you might want to dip your feet into residential real estate, as long as the bylaws of the GTA, or at least Ontario, are favoring the landlord, not the tenant as much. We
See,
love the tenant. I'm a tenant, but
yeah,
anyways, yeah.
I'm not sure about the Canadian markets in terms of residential versus commercial, but from my understanding, the 2008 collapse happened because of bad residential mortgages.
That's right, exactly.
What
That is
we
exactly what
have,
happened.
what we
That's
have
part of the
now,
problem, I would say. That would be part
what
of the problem.
what we have now are bad commercial loans. So what we're seeing now, because of all the companies, the big companies that have
That
sent all their
thrive.
people home to work, and all the empty office buildings downtown of these multi-billion-dollar companies, you have residential leases on huge multi-hundred million dollar properties in
Complexes,
main
yeah.
metropolitan areas in Europe and the US, probably Canada, all sitting empty,
Fuck off, man.
months and months behind on their leases. So all those mortgages, all those commercial mortgage-backed securities are all bad. And they don't, they're, I think they're treading water. Once they can't tread water anymore, and that actually, those chickens come home to roost, I think you're going to see a domino effect that's going to be traumatic for the banking world.
So,
That's a, yeah. Sorry, Maya, but
there's
that's
yes,
interesting. I
this.
might want to talk to you a little bit about that in depth more,
Okay.
because that's something to, 2023. I remember the commercial loans definitely being a huge discussion, and a
Yeah, but
problem
no, that's
there.
not what's happening in
But
Canada. Canada don't have that going
no,
on the
that's
commercial
fine.
side
But
right
in
now.
the U.S., it's a
The
number one economy.
U.S. is a
Sorry,
different
what?
animal. The U.S. is a
Yeah,
different animal in that regard. I just wanted to just point this out because I've been listening. A lot of stuff that Sunny's mentioned is mainly strictly affiliated or directed towards the Canadian market, and that makes sense. And I don't agree with you, but the problem with Canada is that it's not that we got loans that were just dirty this time. This time in the U.S., a lot of the loans were sold off to foreign banks, right? Because technically, like let's say the pigs, the
yeah. But they
PIGS.
bundled it up. They bundled it up
Hold
with
on,
bullshit,
hold on. So hold
with
on.
strippers that were
The
buying
Canadian
three
side,
properties. They were saying that, yeah,
is
I made
really
200
no,
grand.
no.
Get
Hold
out of
on,
here.
no. That's where you're wrong. The Canadian side is a little bit fucked up. So like the U.S. is like this. You got a lot of people coming to the U.S., but a lot of people coming to the U.S. comparable to coming to Canada are this. That the Canadian people that are coming to Canada, let's say a guy comes from Iran, India, China, a lot of them are coming with cash in hand. So what happens is they come here, and yes, they have cash in hand, and they buy their first property. So they have one property that's bought off. You understand? And then they collateral that home to get a leveraged loan for a second home. But they're just immigrants. For next 2-3 years, they don't have status. So these people have now come to the country and leveraged a home at a higher risk value than anything else. This is the biggest issue in Canada right now, I'm telling you. This is like as an assessment. And then that home eventually, let's say 3 years, you're a citizen, okay, in Canada. It's not like the US. You've leveraged yourself a ton of money, okay? You've made some money the first couple of years. And now what you're seeing is this. The guy who is using properties to be able to make money is now, not only is he not making money, he's losing money per home that he's bought. And now that one home that he's bought, that all his money went into, has been leveraged to totality with collateral money. So now you're renting out a home that you were renting out for $3,800 a month before, as an example. Right? Just listen to this.
Mm-hmm.
This is crazy, Jonah. You're renting out a house for, so imagine you paid, let's say, I'm going to use a small number, $600,000 in 2012. You came here, you bought a home, that was your first home. You leveraged that home by 2018 because now that home was worth $1 million. You got 80% of that million because you bought the house totally out. You got 800 grand, let's just say, okay? 600 to 800 grand Canadian more. Now you go out and you put down 3 down payments on 3 separate homes. You're carrying 3 other mortgages, but no mortgage on your initial investment because you bought it. You've only leveraged against your first investment. Now, you can pay all these places by renting each out for $3,800 a month, but eventually, when it comes to 2022, you know, what happened was they had to pull the trigger on the interest, which should have happened in 2018. Due to that, nobody had a warning sign, and people here are really stupid in this type of way. People are very compliant with everything that happens. It is what happens in a social system. Social system is meant to make you comply because everything else is taken care of. So you don't have to worry about your health bill. A lot of people don't have to pay for medicine. A lot of people don't have to pay for a lot of shit. If let's say this year, a lot of people don't know. If you made less than $90,000 in Canada, you can go to a dentist and get all your dentistry work for fucking free. Free. People don't even know that. So if you made less than 90 grand this year, as a family, you can just go into any dentist office right now, get your fucking teeth cleaned, get your fillings fixed, get your cavities done, all for free. Root canals done for free. I know this for a fact because my buddy's a supplier in the industry. So just imagine what I'm explaining. So all this stuff is always keeping you compliant that, you know what, things will be okay. Nothing can go wrong here. It'll be okay. Worst case, we pay a little bit more for a little bit, and it makes you compliant to what the system is trying to feed to you. It's a very complex, fucked up way to do it. Okay, U.S. is not like that. U.S. is capitalist. Very simple, straight up way. You have social systems going on in state by state. Why? Because you can't control if Minnesota today has a fucking problem with manipulation and fucking around and now laundering of millions of dollars across years for just a simple learning facility. As an example, you see what I'm saying to you? See where I'm going with this? Okay, now, here's the difference between the U.S. and Canada. So now in Canada, you got these guys that were renting out a house for $3,800, paying the mortgage, everything was good. Now that same guy has to not only rent out his first floor, second floor, third floor, but now he's got to rent out his basement as a separate entity to be able to even keep his head afloat. Now what's happening is people are not able to pay those bills because for months they've been paying out of pocket from lines of credits, from home line credits, and now you've gone deeper and deeper into your leveraged problem. And now you're going to start selling one property after the other in the hopes that you can at least pay off this one mortgage. The funny part is, the guy that owns more properties is actually in a better situation than the guy that owns one property. I'm going to tell you why. Because if that guy who owns 6 properties is going to lose money on every 6, it's almost an impossibility. There's areas in the city, and you know this for a fact, Sonny, that like the prices are just set in stone. They don't go up and down. The up and down happens around them, but nothing internally. Like my mom's area, there's Weston Downs. No price change is happening there because nobody will sell their home. You know what? Because everybody's bought the home. There's no price change in the area. Well, hold on. Let me just finish. The logic is, it's very simple. What happens? How do you make money on a stock and how do you lose money? The moment you sell the stock, if it's going down, you lose. The moment you hang on to it, you never lose. You can sit on it for fucking 10 more years. If you never sell the fucking house and it's paid off, you ain't losing. No. U.S. commercial side is
you are losing because when you sell it after 10 years and you realize that it's actually less than what you thought it was 10 years ago.
You're talking about 10 years down the road.
You've actually lost money.
But if you actually like, let's just say in
it's understanding the place.
If I buy a house to live in there, if I buy a house to live in that house, okay, uh, so if you're buying a place and you own it, it's totally different than a place you're buying separate to be able to live in. So my point is, the house that you own doesn't matter if it goes up and down because you're not selling it; you're staying there. That means you're never gonna really lose. You know, it doesn't matter. There's a
That's
cost of
not
living.
true, because
Hold
if you
on,
make the wrong
you're an idiot.
mistake,
That's all there is. Listen, I'm not calling you an idiot in
no.
that way. I'm calling you an idiot in this way. That you do lose. Yes, I get you do lose, but you
I
don't lose
just
because
gave you
if
an
I don't sell
example
it,
of somebody who gained $1 million after
that
a
guy is
decade,
in the
and
boat
after
that I
one
just
bad
explained to you,
move,
though.
erased, and he sold his actual primary residence
That's
because he
different.
had to, and then he went to go rent. And
But
today,
that's different.
as
That's
of today,
different.
after three, think about it. I sold his property and it closed in, I think, 2022, end of 22 or beginning of 2023. No, sorry, 2023. And in 2023, he liquidated. It's been almost 3 years. We're going in 2026, Jonah. And I'll be honest with you, this guy is still renting. This guy does not have a single
Uh,
penny to put as a down payment for a house. And he wants and what ends up happening with these people who get into these situations, they're pushed to the edge. They end up doing fraud, right? That's all
right.
they can
But
do,
that's
right?
what that
That's
was what I was gonna
another
tell you. Most of them are
that's another
already doing
conversation we
fraud,
can
though,
have.
Sonny. Yeah,
What
that's
what
separate. But hold on, let me just finish this up quick.
okay,
So,
so
in terms of the U.S. commercial market, the crazy part is this. I think, anyways. Yeah, I want the reason why I'm putting this out there is because I want you to rebuttal. I want you to tell me what you think. If
that's
you
why
don't
you
tell
call
me,
it the
then
Myer show. I got to get popcorn for this,
okay,
man,
that's right.
Jonah.
That's
Holy
right.
shit, man.
So
You know?
yeah, we get aggressive around here, bro,
Give
because
us
we're
two
talking
minutes
real
of each
shit.
conversation. I'm listening,
So just
Myer.
imagine this. U.S. market is like the flip of that because right now the housing market in the U.S. is pretty strong. The downside is now you're getting to a point where certain areas that used to be cheaper are more expensive. So people have moved towards the commercial side. But across the last decade, 15 years, what has been the driving factor has been businesses expanding, getting bigger, getting injections of money.
Sorry, could you repeat that last part there? You broke up.
No.
You inject what? You said something about injections of
Money
money?
from
Injections of
they've been
money.
getting straight money from the U.S. government.
Yeah,
Sorry, I
yeah.
know I cut off there for a second. I'm gonna be done after, so I gotta take off quick. But my point is, now when you see what's gonna
How
happen
can you
in the
take
U.S.
off when
market, it's gonna change everything,
you
in my
can't take
opinion.
off, Myer?
It's gonna be a
You
big
gotta
shakeup.
wait for another 10,
I
15
can't hear you,
minutes, okay?
Sonny, for some reason.
Oh, you can't hear me?
I can hear you.
Okay, sorry
I'll be
about
right
that.
back.
Okay, sure. So, Jonah, there's
Well,
a lot to
so
intake. There's a lot to intake
yeah, so
there.
here's a thought for you as well. So I agree with both of you in some ways. So I agree with you, Sonny, that you sometimes you can lose even on your primary residence. It's true. But I agree with Meyer in the fact that so an old real estate mentor of mine told me years and years ago, he would always repeat, you only can ever lose money in real estate if you're forced to sell when you'd rather not. If you're forced to exit, and it's the same thing in crypto, it's the same thing in the stock market, it's the same thing in precious metals. If you are not forced to sell and you can ride out the storm, you'll be able to sell at a better position for sure.
Okay, so I understand that. However, there are certain things, certain examples I could give where, and you have to understand that, like, when I think and when I make these arguments, I try and be as realistic as possible. So, for example, today, if we buy silver, right? Today, I take your suggestion. I listen to this podcast as a fan. I say, these guys are talking about silver. Silver has been exploding. First of all, silver has been exploding, but it's very still on the quiet side. They're not retailers ain't even buying yet. Okay, so it's funny because you say this is the beginning of innings. I've already been buying silver between $30 and $40. I've been already on silver. So, but the thing is that it's interesting when you say uh silver's just in the beginning innings, because for me as somebody who's I would say a trader slash investor, those kind of words and stuff like that are like, that's when the top is, right? That's an example. Or I was trying to use an example, you don't lose money if you in the long run or whatnot. The thing is that it depends on where you are, especially for any viewer that's listening to this or whatnot. um where are you in your life? So if you're 35 years old or 40 years old and you say, I buy silver today, and you say, hold it out, or I have real estate and I buy today and hold out, for 20 years, sure, you could maybe weather the storm over 20 years, right? But then, it depends on every single asset class that you buy. For example, silver. Silver might die and go back to $25 after 20 years because something could potentially catastrophically happen. I'm just giving an example
Sure.
because I'll give you an example. 1980, silver was what? And then 1995, what was silver? Like silver went from $50 or $48, something like that, all the way back to like $3. And then but if someone took the advice of just hold it for long term, if you bought it in 1980 and you saw 10 years, silver went to $10, you've lost 50% of your value or whatever the case is. Um, you say you hold on for another 10 years. Well, guess what? Silver didn't do anything for like 40 years, 50 years. How long can you wait? If I bought silver at 20, by the time I'm 70, silver just gave me a 30% return, right? From 50 to
Well,
80 or whatever the case is.
I
Get
mean,
what I'm trying to say? So it's
it's up. I get what you're trying to say, but it's up 100% this year alone.
Oh, I
And
don't
also,
disagree, but I think it's timing. And I forgot to mention that with Myer,
yeah.
is that timing. I got lucky in a sense that perfect, is that I closed my deal on January of 2022, just near the peak. I got timing. I was able to purchase my property in 2015 when it was like still like nowhere close to the top. So it's same thing with silver. If we buy today, if I put $5,000 US dollars today, or Monday morning on silver, whatever this price is, let's call it $75. I hope. I hope it's more. It's like 80, but let's say it's $75. I need to make assurance that we're touching 150, or at
Well,
minimum assurance that we're touching 100 by January by February, because this is ridiculous. Why would I want to own silver at 75, and let's just say, it hypothetically gets down to 50 in the next year, right? And just consolidates, right?
well, so there's a
Is
couple
it worth it?
factors. There's a couple factors. Absolutely. I mean, even if it drops down from here over the next 6 months down to $50, it can't. That's going to be the best buying opportunity to be able to continue to load up before it. Because what you have is JP Morgan has been manipulating prices with shorts.
All
Citadel
right,
has been
guys. I'll see you
manipulating
guys
prices
after.
with
I gotta
shorts.
go.
All right, cheers, Meyer. Thank you, sir.
Take care,
Be
man.
good.
I'll see you
We'll
soon.
continue this another day.
Yes,
From
sir.
my end, anyways.
Yes, sir.
Peace. Jonah, we'll
Appreciate you.
talk later, brother.
Yep. Yep. No,
So,
I'm listening.
yeah,
JP
so
Morgan, I knew about. Yep. He's a lot of
uh,
what's it puts on and short selling
yeah, and
on
Citadel as
silver.
well. And there's a number of other big banking institutions that have been shorting it. Meanwhile, you can look this up. China is one of the biggest producers of silver in the world, right? But they have been buying the ore, silver ore, pre-silver production material around the world in fevered fashion over the last 6 to 8 months. They have been buying up the ore. So it's not actually hitting the markets. It's not affecting the price of silver. But what is silver used for? Everything from computer chips to warheads.
Yeah, missiles and whatnot. Yeah.
Everything. Everything.
No, I'm
And
not
with
disagreeing there. I think the thing is look. So the law. So for me, I believe silver can get to my price target on silver is about like a bull case scenario would be like $480 to $600. That's a bull case scenario for me. Um, but the logic that I have behind that is what I kind of discovered or kind of connected the dots this past weekend. And I was telling you earlier between 1971 to 1980. If you look at that, the past year and a half, Wall Street, Main Street, Bay Street, I don't give a crap who it is. Everybody's correlating 1970s as what's happening, the 1970s phenomenon, and what's happening now, right? Is that a fair statement?
Yep.
And so, you know, I figured out like what happened from 1970s and what's happening now. And so I believe that 1971, when Richard Nixon got United States of America off the gold standard
Yep.
and created fiat currency, it was basically unlimited money, an unlimited credit card, correct? Only after decades does, we come to realize that that was, you should have bought everything in 1971, I guess, or whatnot, right? But more or less, That's a credit. If you think about it, there's two different things that I look at: debasement and um, credit. And so, in regards to the 1971 trade, in 1971, when Richard Nixon had taken the USA off the gold standard, it told the bond market and told the rest of the world, all the people who rule the world, the billionaires, the trillionaires, whatever you want, all the rich, and they sat there and said, you know what? Whatever you're doing is going to screw over the United States of America. So we're going to
Mhm.
put our money, our hard earned money, into precious metals. And if you do ChatGPT, you can ask what was gold before Richard Nixon had made that announcement and what was gold after Richard made that announcement, all the way up to 1980. And gold went from $38 all the way to $850 in 1980. Do the math. So it's almost a 20, 30x, right? So that was
Yep.
the best trade of the decade. And silver alone, you could do the math, was $1.50, and it averaged all the way up to $39, or not 39, $49. People say 50, but ChatGPT I think mentioned something about 49.80 or something like that.
Yep.
So that's a 30 trade. So now that's called the debasement trade, right? The debasement trade. The credit trade is that they said fiat currency exists, so you guys can spend as much money as you want, right? And we
Yep.
could go over, a few things, Japan carry yen trade or whatever you want to call that. We could go over that. I'm starting to understand more about that. And please note that, like, I'm not a smart ass or anything like that. I'm just trying to figure out where is this money going,
Yep.
right? And so I found, so that's the debasement trade. And so that right now, what you're talking, you're loving silver, and you're saying the beginning innings is you're basically saying that the dollar's done, and you're doing a debasement trade. I understand you're trying to do an institutional and infrastructure play with silver, and I totally agree with you that silver is a beautiful play going into the next 10 years because of this AI infrastructure play. Totally agree with you, digital era. I think you need silver, right? The thing is that there's so much manipulation in the silver pricing, right? That eventually silver will become like WTI oil, and it'll just like hover around a certain price range. That's it. And
See, I
you know what I mean? In
disagree.
the next
The
10 years,
reason
you're
the
gonna see
reason I
that.
disagree with that is because oil is not a limited resource. It just keeps coming. It seems that there's an infinite supply because every
No,
time they say
it's
they're
not.
running out,
It's
it's not. It's not from fossil. They call it fossil fuels, but it's not. It has nothing to do with fossils.
I
It's
guess they
it's got
water it
BS.
down. They water it
Yeah,
down a little bit, maybe, sure, to
but
extract as much oil, but
even in Northern California, we have untapped oil fields we haven't even touched, right? And natural gas as well. It's not just, and so I think that there's a lot of manipulation in terms of psychology there. But silver, what we're seeing right now over the last 3 to 5 years, especially, is silver production may have stayed about steady year on year, right? But silver demand has gone
through the
exponentially
roof.
up
Of course, it
through the
has to.
roof.
Industrial demand is through the roof. It's forget
Especially
about
with
mining. There is no
AI,
miners.
especially with AI and all the technology and all the chips and I mean, it's everything from solar panels to microchips, everything from warheads to, I mean, it's everything.
So
And I
yeah,
think that's why China is making its move to get out ahead of and stay off of COMEX. Now, the COMEX markets, the reason I think it's going to explode as well is, you can buy the paper or silver, but if you stand for delivery and ask for that silver to be delivered when your option is up, then they have to deliver. But if they don't have, there's like ten times the amount of paper silver is traded on the market than silver actually exists.
yeah, they don't
So
have the silver. They don't
they
have the
don't.
gold. They don't have
And
gold or
and
silver.
so
They can't give it up. That's why
all it
Trump is asking for all the gold back at Fort Knox.
exactly, and all it
But
takes
London
is
isn't
for
giving it. London, England doesn't have it. You people, they
but
don't have it.
exactly, but all it takes is for major countries and major companies to stand for delivery, and you start to deplete the COMEX's reserve of silver, and then they can't fulfill all. So it's going to be a race to see who can get their contracts
Yeah,
filled.
but I don't think they have it. There's no, I think that people have leveraged too much of the gold into treasury bills. People took over the past 20, 30, 40 years, people have basically taken gold and said, take this gold, put it into security in your vaults, but then leverage me these treasury bills at 4% or 3% or 8%, 10%.
Yep.
And then they did that. And then they took this gold. And now you have all of India and China own all this gold. I have so much gold. Just got married. I get gifted gold. I got gold, whatever, silver, this and that. You put it in the vaults. Indians all have gold. It's disgusting how much we have, right? And it's not just 1 gram or 2 gram. We don't have vaults of it, but every gold counts, right? And
Yep.
we have almost 1.5 billion population. Do the math, right? Then China also has 1 billion, right? So do the math. We got 2.5 billion out of 7 billion. We have a 25% population, just those two continents. So the gold right there, I totally agree with you. It's trying to understand price. So check this out. So I told you about the 1971, 1980 thought right there. Everybody kind of can chat GPT that, the 2030x move. That was the debasement.
Side
Yep.
note, since you just mentioned it, congrats again on your recent marriage. That's
Oh,
exciting.
thank you. Oh, thank you. Thank you.
Congratulations,
Thank you.
brother.
Yeah.
Yeah, absolutely.
Um, so um, Richard Nixon going off the gold goes for the debasement. That's what the market basically taught us. You follow the money, right? And the money right now is going into silver, right? That's the only play to have right now. If you want to make money in the markets, people say, "Oh, I got small cap, I got this." No, no, no. Just buy silver. You would have been stupid if you didn't buy silver a month ago. It's up 60%, doing nothing. No stress, no stress. 6 months ago, you
I
doubled. You get what I'm trying to say? So
if you were to write me a check for $1 million right now and ask
to
me to
sell your
invest it
silver.
for you,
Oh yeah.
okay? This is what I would do. I would put probably 30 to 40% max in silver, and the rest I would put in XRP.
Oh, okay. So I still think there's
Those
a
are my two
bottoming
plays.
out. I know, but I wouldn't do it today on XRP. I think you could bottom out. XRP will bottom out. So here's my next topic of discussion right here
I love
I
it.
mean, we haven't finished off even real estate there, the first one, but so two words are my favorite words now, and it's gonna basically dictate how I trade in the markets. I'm a 6 month trader, 6 to 12 month. So credit and debasement. So right now there's a debasement trade happening. It's been happening over the past few years. Okay. Something happened in 2021 or 2020, sure, 2021, but there's something happened in 2025 which really caught my eye. And that this year was Trump announcing the big beautiful bill, right? So
Yeah.
that big beautiful bill, to me, what Richard Nixon did off taking the gold, taking US off the gold, and then creating fiat currency that created a credit card for US to just keep spending, no limit, just keep going, just keep spending. That's how this growth happened.
Yep.
Now Trump comes in and he says, now what we're going to do is we're going to allow everybody to buy stable coins, which is 1-to-1 ratio to the treasury bills. Okay. That though is a sets precedence to cryptocurrencies. Stablecoin is a cryptocurrency to some degree, one could argue. Is that fair to
Yep.
say?
Yep.
I don't know so much. I study. I have books. Like I have bookshelves of books, and like I have basic books. Bitcoin maximalists and stuff like that. And tell me a little bit about Bitcoin and Ethereum, and I don't know so much about XRP. Um, we could just I'll probably just listen to you. But we're going back to what I was saying is that the stable coins is a big deal because I believe stable coins, cryptocurrencies, is the new fiat currency. And it's a new infrastructure that's going to be played out over the next 50 years. This is, I would say, sure, the second inning you want to call it. However, what this means is that take a credit card and now put it on steroids. You get what I'm trying to say? Like, think about it. What people did for 50 years after Richard Nixon, they took a dollar, US dollar, and they leveraged it 4 times, 25 cents, 25 cents. And then somebody took that 25 cents and they stretched it out as much as they could. You stretch a dollar out as much as you can and then you invest it and leverage it and credit as much as you can. That's what the US has done. That's our capitalism, right?
It's true.
They can't do it anymore. You know what I mean? So now instead of bringing the whole system down, their solution is to say, you know what, citizens, we don't have anybody that can buy our US debt. So instead of having Japan or China and all that buy our US debt, we're just going to say, like GICs, we're just going to basically say, you guys can buy stable coins now, and your $1 stable coin will be equivalent to you buying $1 US Treasury, which is our debt. So the US citizens will buy your debt, right? Your own people will buy the debt. The big guys will be, and that's a big problem in itself. But the cryptocurrencies like Bitcoin will go to 0.000000001. Is that a true statement?
Yeah.
So if that's the case and there's an exponential number, you can't do that on $1 bill, but you can do that on cryptocurrencies. And
Yep.
how many millions of Bitcoin did Satoshi make?
What is it?
Uh,
It's 72
24,
billion, 24 billion. I don't
24
remember.
million? Yeah.
I don't remember.
24 million, something like that.
Yeah.
They'll all be done by 2100 or something like that. But they'll all be minted or mined. But what I'm trying to say is that that's the new fiat currency. And if you don't get on that play, which you already said, put if you had $1 million, put on XRP. So it's good that you're thinking that. You're basically in the same line as thinking as I am. I'm in silver and Bitcoin. And I'll be honest with you, I'm going to try and prove to everybody that I can like 10x my money by just doing two plays. Buy silver, buy Bitcoin. But time it. That's it.
I think I think I think Bitcoin is gonna bite you in the ass.
Really, eh? You
I
don't think
think
Bitcoin can get to
I
20,
think
250,000 by 2029? I
no,
think it can.
I think money's gonna rotate away from Bitcoin into stable coins, XRP, etc. I don't think I think it's too archaic, it's too slow, it's not efficient, and it's
Okay, okay, here's the question though. Okay. The first question is what's Bitcoin's identity? Because in my opinion, I think there's so many arguments of what Bitcoin really is, and I truly believe I think I figured out what Bitcoin really is. Remember, debasement, and the second is credit, which is Bitcoin. And I believe Bitcoin is still a speculative asset, and it's still being treated as a speculative asset. It's slowly
that
going to stop.
that I
XRP
agree with.
also, uh, and so and so here's the second thing. So that I was talking about was credit, and so credit has been a big factor in the rise and downfall of Bitcoin and cryptocurrencies. And the reason why I say that is if I were to take your credit card that you get, like I said, credit's unlimited, but then I say to you, okay, you can spend whatever you want. You find this Bitcoin and you're like, oh, let's buy it, and then all of a sudden it goes from 1,000 to 10,000 because everybody's trying to buy it because it's an unlimited credit card, right? You can do whatever, you can buy whatever you want. And when you can buy whatever you want, a lot of people throughout history just buy stupid shit. People were
Yep.
buying monkey NFTs for 600,000. People bought
That's
a
crazy.
banana. You get what I'm trying to say?
Yeah.
So so people do stupid things when you have a. I'm married now, so if I gave my wife my credit card and she went shopping, I'll be honest with you, she'd buy some stupid shit. I still love her, but let's be
Right.
real. So now let's just say, let's turn the tables. Now you have your credit card, but I told you, Jonah, you know what? I'm sorry, you have a limit. Your limit's only, I don't know, 5,000, right? So now you're like, whoa, I had a credit card that was unlimited. Now I can only buy 5,000. So if that's the case, what are the first things you're going to sell? The most speculative assets you could think that doesn't even mean shit. And that is why I believe you see these Bitcoin drops significantly of 40, 50, 70, 80% drawdowns that they talk about. Is because globally what ends up happening is that like, these big dogs or whoever rules the world or whatever, they turn on these taps and say, no problem, guys, spend as much as you want, right? And it's a 4 year cycle. I hope I'm right, but I'm starting to catch on these 4 year cycles because that's Bitcoin. Bitcoin has these 4 year cycles. So I started thinking, I'm like, what's up with these 4 year cycles? And so the first 2 years, if I'm correct, I don't know how the order goes, but let's just say this is my order. The 2 years, the taps are shut off. So Bitcoin, that's where the collapse happens, right? So this right now, what we were seeing, September of 2025, it could be even up to April, I think, of 2026, but that will be the top of Bitcoin, and it'll only go down because the credits have all the taps have all been shut off. Credit is being um, uh, global credit is being diminished. It's being evaporated right now. It's being tightened right now. There's something going behind the scenes that we're not really seeing. And that's why you're seeing silver explode, gold explode. There's a few other reasons and stuff we can talk about later, blah, blah, blah.
Yeah,
But with cryptocurrencies, this Bitcoin, after the 18 months of the cycle, I believe that that's the bottom, and you buy that bottom of Bitcoin, whatever it is. At one point in 2023, I think it was 17,000, 13,000. Sure. Did you know that I just listened to a podcast recently and there was a flash crash in the recent 2 weeks or the last 30, 60 days that Bitcoin went to 25,000? Bitcoin's at 88,000 right now. There was
yeah,
a flash crash and there was an order that somebody had put and bought Bitcoin at $25,000. I mean, I'm on the stock market exchange. I'm not in the 24/7 trading markets, so I would have not seen that. But I heard that on a reputable podcast, right? I'll share later on some of my
yeah.
podcasts that I listen to. But so uh 18 months is the draw. So I believe 2026 and middle of 2027, which equates to 18 months. I believe that's going to be the negative years. Those are the bad drawdowns. So you're going to see that Bitcoin, I believe Bitcoin might get to 30,000 to 40,000. So I'm hoping that I have enough ammunition to be buying those dips. Now, let's say, what's XRP at right now?
XRP right now is at 189.
189. So can you
Yeah.
see XRP get to like maybe 60 cents, 70 cents? Could
I
you
mean,
see that? And then
it could. I'm right now, my next entry is at 160. That's where
at
my entry
160,
is.
okay, so that's about 20% drawdown there, 15, 20%. So I'll look out for that. I'll start watching out on XRP and try to see if I can give any price targets or anything like that over the next 6 months. See that. Because if let's just say, like for me, if somebody told me and they had, Bitcoin's at 80,000, 88,000, but trust me, Bitcoin will get to 65. I don't want to be buying Bitcoin at 80. Like if I did, I'm
So
like I could buy. So we don't,
I
we never
I
know, but
personally I personally feel that Bitcoin will go to zero.
oh really?
I think Bitcoin's days are
What about
numbered.
Ethereum? What about
Absolutely.
Ethereum?
So it's interesting because the difference between Ethereum and Bitcoin in terms of blockchain technology is enormous. I don't think most people appreciate the difference between the
Ethereum
original
and Bitcoin.
blockchain versus the smart contract blockchain, right?
Correct.
So the analogy that I set up for people who may not be familiar with the whole blockchain technology is you have one which is like in your brain, you have memory neurons that just store memory and give the memory once you after you deposit, you can recall and pull from that's Bitcoin. If you have active reasoning neurons that actually create thoughts and move things and what that's the Ethereum blockchain. That's the difference. A pure repository versus an active agent. That's the
Okay.
difference between the two.
So where's
So
XRP come into the mix then?
XRP is a beautiful hybrid. And XRP actually is what I believe is it's the rails that will supplant and replace Swift, the rails for all international payments. It's the rails for the new
It's
monetary
an
system.
infrastructure play, yeah. It's the infrastructure
Exactly,
of our of
exactly.
our
And if you
digital
look,
financing system, yeah.
I think 6 to 8 months ago, they bought Hidden Road, which is a clearinghouse that clears billions of dollars a month in payments internationally.
And they bought
Or
them out. Who bought them out? The founder of XRP?
Ripple Labs, the company that owns XRP that runs the token, basically Ripple
Yeah.
itself bought Hidden Road.
Now
Hidden
the
Road was
owner,
one of
the founder, sorry, I believe it's not Ethereum's founder went off, not a founder, but like somebody in the high rankings of Ethereum, I believe, went off and then ended up going off and creating another Solana. Now, XRP, who was the founder of XRP? And what do you know? Have any history behind that?
I'm drawing a blank on his name right now.
Okay.
But I do. I mean, I know that he's. I mean, he's essentially pushing for a total innovation and modernization of our banking system. The I think a lot of the Bitcoin and crypto maximalists at the beginning rejected Ripple because it was, or XRP, because it was the banker's coin, right? So I think now it's just they've Ripple has gained too much momentum.
I've noticed that a lot, that XRP is definitely gaining traction and whatnot. Um, I have a Wealth account. It's a Canadian. I don't know if it's in the US, but um, you're allowed to buy XRP on that platform now and whatnot. But with that correlation that I was trying to get at
Yeah.
with Bitcoin. So first off, knowing Bitcoin as an identity, right? We were just discussing that, like I brought that up. Understanding Bitcoin number one as an identity and the other cryptocurrencies. I believe Bitcoin is speculative asset for sure, but eventually, yeah, people might be right. It might be the digital gold, and that is it. Because I agree with you. If we are entering this digital world, 99.99%, you will need Ethereum or XRP or what you're saying, whoever's going to be the number one to play out this infrastructure. I'll be honest with you, there's more contracts and more accessibility on Ethereum right now in the current world, especially when you have Tom Lee and guys like that that are literally pushing for Ethereum networks, especially after this big beautiful bill act that got passed by Trump.
Mm-hmm.
So, Ethereum is, heavily weighted, obviously the second largest cryptocurrency, but whoever wins, right? At the end of the day, you are right. Bitcoin doesn't have that, strong smart contract infrastructure play where, you know, that's going to be where AI and cryptocurrencies really, evolve in, right? But there is a correlation between 1971 to 1980 and then 2020 or 2020, sorry, 2021 to 2030. And I do believe, and that's where my play is coming in with yours. And I think that's why we kind of, hit it off because your silver trade, yeah, I agree with you. Silver definitely can get, if you just do a 10x on silver, what was silver trading at in 2021? So I checked it out. It was $18.50. Maybe you caught it at the bottom or whatever, but sure, $18, let's just call it. Do a 10x on 18. Now, silver in 1971 to 1980 did a 33 4x, right? So let's just divide that by just do 10x. Silver should be at 180. That's the bare minimum, correct? That's on a 10x level. Now, and that's from 2021 to 2030. Now, um, that's the debasement trade. The credit trade, this is where I feel like you, this is where you and me go have differences on the price of silver over the next 12 months. And here's the thing, in the next 6 to 12 months, based on my 4-year cycle, I believe 2026 will be the taps are turned off, meaning you will not be able to be spending a lot of money. So you have to sell. That means that's why you have these 20% drawdowns. 2022 and 23 are perfect examples. Then you got to look at
Mm-hmm.
2018, 4 years after before 2022. That's a 4-year cycle. 2018 was a bad years of the market, and so forth and so forth, right? Now I can't get it always right, but 2008 was obviously, then 2000, and you know what I mean? Like that was a bad year, also 4-year cycle. Um, so with the 2022, or sorry, 2021 to 2030, this debasement trade, the credit is the biggest thing that I'm looking at. And if everything has gone up over the past 2 years, correct? Because the
Mm-hmm.
credits have been turned on, right? The taps, sorry, not the credit. The taps have been turned on,
Mm-hmm.
right? Then when the taps are turned off, everything has to come down, or the most speculative. Obviously, silver will be one of them, and gold. There will be a downward pressure because billions, if not trillions of dollars, all have to be wiped out and back into people's pockets or back into the banks, wherever this money goes, right?
Right.
And so that's why I feel like it's a very tough time for silver. Silver gets from 75 to 100. That's the bet. That's the guarantee right there. 75 to 100 in the next 3 months. The problem is that once these taps get turned off, not just the stock market goes down, gold and silver also has to come down because that's where the money went. People leverage their money and they also put it. For example, if I know that silver is only going up, why wouldn't I go to the bank tomorrow and say, "Hey, can I get a line of credit of 10,000?" Now I take that 10,000, put it on silver, wait on 3 months. Now I made a 20% trade. But let's just say things get ugly or whatever the case is. I'm talking on a line of credit situation. There's people who have millions of dollars that put it on this. They have to now, they're on margin calls, right? And this is now talking about some of the podcasts I was listening to that they were mentioning that there's a lot of people on margin calls. And when you're on margin calls and they call you for whatever loan that you took or whatever margin you're on, you got to pay that up by 4 p.m. or 5 p.m. that day. And if you can't, then you got to sell your Amazon, you got to sell your Google, you got to sell everything that you have in
Yep.
order to give that. And some of that my problem with that is how much of that exposure is silver and gold. And I'll be honest with you, silver and gold has gone up a double in a year and a half. So why wouldn't people trim position at least 30%? That means there will be a drawdown in price. You cannot pass $100. You get
No,
what
it's
I'm trying to
true.
say? You
I
see what I'm trying
do.
to say? You got,
I
sorry, I'll end on this. I do want to listen to you, but the last part but the trade is till 2030, and then we're only in 2026. So the question is does 2026 a consolidation year of silver? For example, when you mentioned $50, if silver gets to 50, do you buy it hand over fist? Or is that the end of the silver trade? Now, if you buy it hand over fist, which you should potentially, maybe, I'm not a financial advisor. Sorry, I should have said that at the beginning. Don't take any legal or financial advice from me. Just listen and all entertainment. Oh, I didn't know Meyer was still in here. But this the silver trade continues till 2030. So does that mean if silver gets to 20 to $600 by 2030, does that mean that you buy the dip or like, there's a lot of, we can keep talking about this, next week and next month and see
yeah.
how it plays out. But that's kind of the bigger thing for timing is for me. I don't want to buy $80 right now. I'll put all my money at silver at 80 and then find out 3 months from now it's at 50 or 40 and I don't got no ammunition to buy more.
Well, I mean, again, and that's where I think prudent investing comes in because, when you have to, when you get buy an asset like silver, there's going to be pullbacks. So you don't spend all your ammunition now. If you have $1 million, you don't put it all in silver now. You put maybe 50 to 60% in silver. When it cuts back, you pull in, you come in heavier to dollar cost average down, right? So the other thing is I would push back a little bit on your 4-year cycle idea. Just food for thought for you and the folks watching is I think what's really important because love them or hate them, um, there is an ethnic group at the center of central banking, right? It's
Could you
just the
repeat that? There's a
reality.
what? There's what?
There is a specific ethnic group behind all of the central banks. It's just what it is, right? Love
Let's
them or
not
hate
say
them,
it. We don't need to say that. And
love
we
them or
got
hate
it. We
them, the
got it.
small
We
hats
got
are
it.
there. Okay.
We got it. We got it. We got it.
So now my family converted from Messianic Judaism as a
Oh
child when I
wow.
was a kid. We were Messianic Jews, which is basically the Protestant Christian version of Judaism, right?
Is that where you go? Is it Messi? Is that the place? Is there a place called Messi in this place?
No,
Is that for the
Messianic means
Islams?
like Messiah. So it was the Jews that believe in
Oh,
the Messiah, so Messianic Jews.
understood.
So I that's part of the reason for my name. being very Jewish as it sounds. Jonah, my actual baptismal name is also very Jewish sounding. So you would think, especially because of the
Oh.
size of my nose, you would think I was Jewish. I'm not, but but I would say
Meyer's Jewish.
one of the most. No one's perfect. It's all right,
Well,
Meyer. We
based on
love
your
you.
nose, I don't know, man. Based on your nose.
Oh yeah, yeah, yeah. Here we
Uh,
go.
there's no camera. There's no camera.
That's
Sorry,
okay.
That's
guys.
fine.
I was in
That's
the
fine.
That's
background
okay.
there.
That's fine.
Anyways,
So the
So
4 year
come on.
cycle, yeah. So you were saying the 4 year cycle, yeah.
so
I should
instead
like
of a
longer.
4 year
I should go
cycle,
6 years. I should go 6 years.
seven.
Wow.
It's so it's called the Shemitah year. So the Shemitah year is every 7 years, and then every 7 times 7 years they have
Smith.
1 year of the Jubilee every 50 years. And so it's 49 of the 7 times 7, and then the 50 year. And that's where everything resets, everything goes back to zero. So we are right now in 2029, 2020, end of 20, so it's like September 28 into 29 is the reset, the end of the Shemitah cycle.
Like right now.
So
Till tomorrow.
we're leading into it. Yep. So if you look at the Shemitah year or the sabbatical year, they have every 7 years. They've got
But
a
that's that. So 2029 for me is the top.
No, no,
That's
no.
the top
20th,
of the
20th,
cycle.
25th
No,
to 29th day of December, he means.
no. What do you mean?
September
No.
September
Yeah.
28 to September 29 is the next Shemitah
2029.
year.
Yeah, 2029, he's saying,
Correct.
Meyer. Yeah. So
Oh,
that's what I'm
shit.
saying. And you know what? My timeline, if you look at it, signifies that it's more of 2029 to 2030, but 2029 is a top. That
September
you
does
got.
make it
So I'm gonna
2029,
ride the
2030.
top. So if that's the end, that means that the top is that's it's like a 1999, the bubble, the pop, the
Jonah,
AI, the dot
what
com
do you think
bubble.
about all this stuff he's saying? Do you think there's a good possibility you think he's in La La
He
Land and
trust
that?
me, you have
I'm
no man.
curious.
He
No,
knows
I'm
I'm
not
so
making fun of
right.
you.
There's
I'm
this
not
is
making
pure
fun of you.
logic.
I want to know.
Meyer,
Let
let
me
me
just hear him
finish.
talk. Let me just
I
hear him talk.
understand, but let me finish. I've explained the debasement trade based on the fact that Richard Nixon, all that, and you have to find logic. You have to connect the dots of how this all happened, and
I'll give
then
you this. The fact
and
that
then
you're
20.
talking about Nixon, you're already on the right track. That's for sure.
I know. Well, it's you know, I said perfect, nothing wrong. And then I have a lot of anyways. And then the 2021 to 2030 trade. This is the next. This is how do you make money? Like if I told you silver was going to 200 and it's a guarantee like 90%, right? Why the heck would you not put all your money on it and therefore make a 7x on it?
Wait,
You
so
turn a
what do you
hundred
think?
grand
Do you think it's
if you
going to
turn a
200?
hundred grand into 700,000 in less than 4 years,
Yeah,
don't
good
you
for you.
think
You did
that's a
well.
phenomenal
No,
trade?
it's
No, if I
phenomenal.
that's what I'm saying. If you put a hundred
Absolutely. You'd be
thousand on
stupid not to
silver,
think it's not phenomenal. Are
exactly.
you
And
stupid?
that's what I feel like we should be doing over every
Hold on.
week,
My question to you is it
figuring it
going to
out.
$200?
I told Jonah, man, what did we say? 600? Did it do 18 times 34. Do 18 times 34.
That's not hard. Okay. It's 200. Okay.
That's not
Yeah, okay.
200. It's over
No, I know.
700.
I know. I know. Yeah, that's right. I was just doing math in my head.
18 times
Jeez.
34,
Yeah, eight
Jeez.
612.
Yeah,
612.
612.
See? And it did. Silver did the 34x, I think, in this 1970 to 19. But that's from bottom to top, right? I'm not trying to. The thing is nobody. I hate these CNBC. I don't hate, but I hate's a strong word. But every time, all of these guys do analysis of stock market, everybody goes, oh, it's a 20%, but they do 20% from bottom to top, top to bottom. You cannot do that. Because I'm telling you, Jonah and Meyer, there is nobody on this planet that times the top and times the bottom. Nobody knew that the S&P was going to top out at 4,934, and nobody caught the bottom at 3,368. It's impossible. You can't do that. Only in hindsight will you notice that. So therefore, what I'm trying to say is that as an investor and as a trader, as I'm learning, you have to have a number in mind when you buy, and you have to have a number in mind when you sell before the trade even happens. So you
Well,
buy silver at 30. Jonah, if I were to ask you, what is a comfortable number of silver to hit in order for Jonah to say, you know what? I think I'm okay cashing out. What would be a number?
Right now, with the numbers you're saying, I'd go with like
I
112,
asked
I'd be
Jonah
out.
Meyer. I asked Jonah Meyer. I love you,
Yeah,
Meyer,
Meyer, come
but
on,
it's
bro.
Jonah's time. We raise hands in these podcasts. We raise
There's
our
no
hand.
raising hands here. We don't emojis.
Anyways, yeah,
No, I
Jonah,
mean,
what was that? That's a good
I
question,
think,
no?
no, it is a good question. I actually think, I was actually thinking about this before when we were talking. Like for me, because of how much it's charged up in the last several months, I would start to take profit right now so that I had some bankroll so that when it
Mm,
corrects and pulls back, I can layer back in. But
yeah.
it's all about dollar cost averaging, both in and out. It's not
Mm,
about putting your whole portfolio into an asset and then pulling it all out simultaneously. Because
yeah.
when you dollar cost average in and out, it
Mm.
it it's a different game, you know?
It's funny because like you don't like Bitcoin. You're saying it's going to zero, so it's hard for me to talk about you to you about my trade. So I wanted to I was telling you earlier in the podcast.
You can tell me even if you don't think I'll like it.
Oh, so like I want to prove to many and especially myself that I can trade two asset
All
classes
right, I'm out.
and
Peace.
10x the take care,
Peace,
Meyer.
Meyer.
You know, I want to just buy silver and Bitcoin, and we were timing it right. And so, you know, I do. I'm in a position right now where I have two accounts of Bitcoin holdings. One, I'm averaged, unfortunately, around 100,000, and then the other one, I'm averaged around, I would say, basically 88 to 90,000. I would say 90,000. I think I'm down 3% on that one. So, anyways, let's just hypothetically say Bitcoin gets retests 100,000. That's it. Forget 125 or 115. It retests 100. I'm now either up 10% on the first account or I'm break even on the other. If I believe that Bitcoin will go to 40,000, do you sell your full position, get out, sit, you know, let's just say 40, $50,000 on cash or whatever the case you have, and then buy Bitcoin over the, let's say, you know, spring, summer of 2026 all the way up to 2027 in hopes that Bitcoin does get to 250, 300,000 based on certain models that I've been assessing and so forth and so forth. How, and in the process of doing that, do you own silver and ride it to $150? Or do you get out of it within the next 3 months once it hits 100?
I mean, I think we should expect Bitcoin to drop back down at the very least back down to I think we're gonna drop down again. It's gonna be down to 80. I mean I don't know.
I don't
I
think
don't
we
really
hold
want to
80.
what's
I
that?
think we go below. I don't think we'll hold 80. Buddy, we have a hard time getting to 90. We hit 90 and it sells off. I look at these charts. I know. I see the
Yeah, let me
price action.
see.
And I, like I said, I do believe it's, to me, it's nothing about Bitcoin. The major focuses that I have right now are credit and debasement. And so, what the market is telling me is that gold and silver is the only place to put your money. So,
Yeah.
why?
Yeah,
They're
that I
saying
agree with.
because, yeah,
That I
and
agree
you
with.
said the fiat currencies are all shit. Why? Because monetary policy, sorry, physical policy is a thing right now happening. Every national government is figuring out a way in their country how to spend money and save their citizens. In 2020, 2021, it was COVID that uh, shifted their governments to say it was the central banks that were in control. That's called monetary policy. They determine interest rates up and down and the, you know, effect of the labor market. But now the tables have turned and now it's the central banks are saying we are tapped out and the national governments have to come in. Trump, you know, Carney in Canada, blah blah blah, right?
Well,
And yeah,
you make a good
and
point of
that's
bringing
yeah.
up the big beautiful bill and the impact, and not only that, but also the Stable Coin Act,
Mm,
because that was huge. I think that, or the what it was called, the Genius Act, right?
The Genius Act. Yeah, yeah, I think
The
so. Yeah.
Genius Act,
Yeah.
yeah. So I think those two things are huge for monetary policy moving forward. I think they're huge also because the stable coin, that the Genius Act also required everybody who's monetizing or tokenizing any asset or commodity to back the stable coin with US Treasuries. So
Yeah,
it's
you were
basically
saying that,
artificially propping up the US dollar and the US markets,
which is
which is
bullshit. And they're see
it's
and the money
brilliant.
is seeing them. No, it's
It's
brilliant, but the money
brilliant
big.
and bullshit.
Yeah,
Exactly.
it's brilliant, but the smart money are putting their money where the smart money. They're putting it in silver and gold because they don't believe in the
So
bullshit. They know that the economy is going to collapse
are
in
you
next
familiar
40,
with
50 years.
are you
Do you know
familiar
what
with
my price
Operation
on gold is?
Sandman?
What?
Are you familiar with Operation Sandman?
No, I'll look into it though.
So
But
Operation
yeah,
Sandman
mm,
is where all the Middle Eastern OPEC nations
mm,
have agreed, and there's some other nations as well,
okay.
have agreed, and some would call it a conspiracy, but there's documented fact evidence to it to indicate that it's true, that they plan on having a coordinated dumping of U.S. treasuries to crash the dollar. Operation Sandman is from the Middle Eastern countries
Okay,
to
interesting.
all of the treasuries that all of their central banks hold, all the treasury notes, just to dump them simultaneously to dethrone
So
the reserve currency.
so
So
so what the carry yen trade Japan. So Japan's so important right now. I noticed it's because they own the most treasuries in the world. So they own $700 billion worth of US treasuries. And here's the problem that's happening that I'm noticing. I could be wrong, but correct me if I'm wrong. So Japan, they're an aging population. So there's a good and bad to both of these things. So AI, they're heavily advanced. Japan and China are so technologically advanced that I do believe Europe, probably not Europe as much, North America, we are so blindsided to what really China and Japan really can do. They're like 8G, 12G. We're still in 5G. Like they're in like next level. They have holograms coming out of your towers, buddy. Get out of here. Like
I know.
it's insane. And so for them, the aging population and what's happening over the past 30 years, they've had negative interest rates. I mean, just to briefly for any viewers and fans or whatever, anybody that wants to like understand about that, is they were basically telling the world in the 1980s, we're going to keep negative interest rates. You guys can take money from us. We won't ask much interest from you, and you go and spend that money around the world. So billionaires would come and say, you know what? Give us 100 million. You know what? I'm going to go put it in U.S. Treasuries. I'm going to put it in U.S. stocks. I'm going to put everything propped up. If you think about it, 20 years ago, it's all credit. It all comes down to credit, right? And so, you know, there's so much to it, Val. It's like, holy
Well,
crap.
and so you're not to interject, but this yen carry trade is so key because
Yeah,
remember that it was like a overnight 10, 20, 10,
yeah,
15% drop in the stock
yeah,
market back in
yeah,
October of last year.
yeah,
That
yeah.
was
August, yeah.
precisely because the Japanese
Yep, yep,
interest rates went up 25%.
yep.
And for the first time in history, they
25
went to
basis points, 25 basis
25
points, yeah.
basis
Well,
points.
which is 25% because it's at zero.
Exactly. So
But the
what's
government came
interest?
in and protected them. I bought that
Well,
dip, by the way,
but
because I knew that
correct,
the governments would come in and protect us. So those are
correct.
joke.
But one could argue that almost half, if not more, I would say almost half to be conservative, almost half of the valuation and the investment in the U.S. stock market comes from the yen carry trade.
Mm,
The amount of capital that has been, the amount of assets that have been pledged to Japanese banks to get yen to invest in the stock market. Because then what happens? The yen has been getting weaker against the dollar's been getting stronger, the stock market's going up. So
which is the
so they
opposite
borrow.
effect. Sorry to cut you off, but that's what's confusing everybody because when you increase your interest rates, your dollar should be going up. But right now, the market is not rewarding the yen and it's only going down. That doesn't make sense. When your interest rates go up, why your dollar's going down? That means that the market is saying that your shit's going to hit the fan. You're not going to be able to do this for long. You're not going to be able to
Exactly.
keep these interest rates for long because your citizens won't be able to, but they can't do anything about it because in Japan, inflation's getting out of hand. So they
But
have to. And
correct.
yeah, and so I think
Correct.
2.5% is the threshold. Japan, if they get to 2.25 or 2.5%, that will, what you just said, about the billions and billions and trillions of dollars that has propped up this US stock market or whatever equities has to all be liquidated and deflated. And but that's where I'm talking about is that the credit, that's a credit situation. There's not enough credit and leverage, so they have to de-risk. They
I
have to go and
personally
sell all their
think
shit. But that's why I'm
I
scared with silver. And sorry to go back to that, but that's what I'm really scared about is that silver price will get caught up in the mix of this bullshit.
I
Or
feel
do you think investors do the opposite and buy silver even more?
it's more to me it's more likely that silver continues as these big institutions get into trouble with the yen carry trade needing to close. They need to start closing positions. Plus, they've got all these shorts on silver they need to cover. I think it's a perfect storm. Because
It
they're
sounds like it, eh? It
they're
really
they're
does.
they're screwed in both. Like they've been leveraging the yen carry trade now. So for those who aren't familiar, imagine this. Let's say Sunny represents Japan. Okay, Sunny gives me $100 million. I give him $100 million worth of stocks or real estate or any asset that or companies, whatever. I give him I pledge, I apothecate is the
Mm,
legal banking term, right? A certain amount of value, and he says, okay, we'll we'll hold this, give you $100 million. I take that $100 million and put it in the U.S. stock market. Stock market goes up 10% over the last 6 months.
look at
Awesome.
that.
Now I have $110 million, but the 100 million USD that I have used to be 100 million USD of yen, but because the dollar has also grown and the yen has deflated, now I only owe him 900 million, I mean $90 million worth of yen. So now
Mm,
I've made two, I've made
20%.
20 million. I've made 20% on my money in 6 months without it
Doing,
was just a
yeah,
loan transaction. That was it,
exactly. Yeah,
right? And so now imagine this adding a couple zeros. We're talking billions or
billion,
trillions of
trillions,
dollars
dollars. Yeah.
in the stock. So what happens? All of a sudden, now if I've got $1 trillion in the stock market and Sonny's like, my central bank just increased interest rates. I can't give it to you at zero interest anymore. I've got to now start charging you interest. So now all of a sudden,
I don't got
my
that money.
my $100 million that I have to pay him back $90 million for, now I have to pay him back 110 million. But then
Mm,
wait, there's more because now because the dollar is weakening, so I have to use
okay,
110
fair enough. I
million
missed that
dollars to
point.
cover the 100 million yen, right? $100 million worth of yen. But now, why are they doing that? Japanese bank is trying to curb inflation, so they're trying to get the value of the yen up. What is that? And you see the US dollar is dropping in value. So you have this seesaw in the opposite direction, which is catching a lot of people, a lot of big
Mm.
institutions with their pants down. And so I think
So
October was
yeah, you noticed that. Yeah,
a
yeah.
sneak peek of things to come towards the beginning of third quarter, end of third quarter, beginning of fourth last year was just a sneak peek of the year to come. I think we're going to hit 20,000 in the S&P. I
You're gonna
think
hit 20,000 on the S&P?
on the Dow, I'm sorry. On the Dow, we're going to fall
On the
back to
Dow?
20,000.
No, no,
Absolutely. I would bet you a thousand
no,
dollars today on
no. Do not bet me $1,000. Keep your money. Keep your money, buddy. You're gonna lose
That's
it in a
rhetorical.
heartbeat.
It's rhetorical. No, but
I know, but I'm just saying I don't.
I
That's a 50%, more than a 50% drawdown. That would be
it's almost
it's
60% at this point.
so he so I so
I firmly believe that's coming though.
the problem that I've noticed is that it's hard to beat the S&P. It's going to be harder and harder to beat the S&P. The reason why I say that is there's so much 401ks. There's so much of the retirement money. There's so much of all this excess money that goes in and has to go in daily and weekly and monthly,
I
that
know.
if you saw a 50 or 40 or 30% correction in the stock market over a span of 12 months, even, let's just say, because they're very volatile now, these movements. It's like it sells off for 3 weeks, and you got to buy that
It's
dip. That's it.
crazy.
You sell off. The stock market all this year would go down 3%. You had to buy that dip, or else it would go up another 5%, 7%. Think about that for a second. Like if you didn't buy these 3% volatile dips, it was like ridiculous. So I caught on to that and I was like, this is ridiculous. So I've cashed out of the stock market quite a bit, but I have like quite a bit of my holdings in silver and I have obviously some money in Bitcoin. It's really just dead money, but I am going to be playing the Bitcoin trade. I'll let you know how that goes. I'll give you an understanding of why I talk about the silver and Bitcoin. So I wanted to show viewers, not viewers, sorry, I didn't really know I was going to be on this podcast, but I wanted to show my friends, my family, and a lot of other, clienteles and stuff like that that I deal with, how can you make good money in the stock market by making good decisions? And so people say, stock market, right away they think you have to have 25,000, 50,000, 100,000. I took $800. I took $800. That's it. Because I said usually anybody can come up with 500 or 800 bucks, to
Hmm.
start investing, right?
That's true.
It doesn't
Yeah.
take a genius you could come up with that. So, and in 14 months, I have proof of this. Like I can show you receipts. This is all like so, and it's small money, but it's like, so in 14 months or 14 or 16 months, I have turned 800 into now 20, as of Monday when the market opens, it'll be 26 or $2,700. So that's basically a triple in 14 months,
I
right?
love that.
And
Yeah.
all I did was two things. One, I bought Bitcoin at 60, 62, and I sold it at 119. And then I took all that money and I just dumped it in silver. And at that
There you
time,
go.
silver must have been $35,
There
$37,
you go.
and
Well,
now so you can definitely do it. There is possibilities out there for any viewers, anybody that listens to this. You know what I mean? There is possibilities that I know we want to make money, and the best way to make it is long term. Be smart about it. But
and it's important to pay attention to the rotation of capital. They move capital from
mm,
one sector to
totally,
another.
bravo,
It's very cyclical, and so you just pay attention to what is happening in the general markets and
bravo.
where
Yeah.
they're moving to next,
Yeah.
and you can ride the wave, man. You don't have to make the wave, you can ride the wave.
And I think that's your silver. I think that, because I have a friend that's in the markets. He invests, but for him, he's safe. He's S&P, Nasdaq, Dow, uh, you know, some banks, Canadian banks. You can't go wrong with them. So anyways, I try and tell him what's going to happen in the next 6 months or so, and he wants to know what's my trade for 2026, right? I also want to know what's the trade. So right now I'm holding on to silver. I think
Yep.
silver is still continuing to outperform, and I think it will outperform in the short term, and short term is three
Hmm.
months. However, I am still worried about the credit system that I was talking to you about. Because remember, whenever I go back to any argument, I go back to debasement and credit. And right now, it's a debasement trade. Why? Because governments around the world are doing physical spending. Therefore, they're raising their deficits beyond means that they will never be able to pay back, right? And so this is what's going to happen. It's They're going to continuously spend. People won't be able to, the physical deficits will be becoming ridiculous. They'll have to raise taxes. It's because they ain't going to go after Amazon or the rich people. They're going to say, go screw yourself. I ain't going to pay a tax. So they go
Well,
after the middleman. So the middleman
yeah.
now has to pay for these bills. That they can't do that because inflation's gone out of hand. And so milk was from $4 to now $10. So now you say, or 4 to 6, or whatever you want to say realistically.
Right.
But then what ends up happening is you have a collapse in the economy, and I think the unemployment in US is going to get to 5%. You watch my word, this year, that's going to be the headline. 5% unemployment.
Now,
Trump doesn't know what he's doing for the labor
and
market. Watch. And it's
I, th-
recorded, it's live. It's live, so this is perfect. Yes, thank you.
I think we're
Mark
gonna
my
see
words.
I think we're going to see, no, and I appreciate that. I think we're going to see hyperinflation
Oh
before
wow, that's
long
a
here in the
big call.
country.
That's a big call. No, but are you talking?
And,
Are you? So it's funny you say that. I
and
actually think
that's,
deflation. I think deflation over the next 12 months. I think hyperinflation, which I was calling for earlier in 2021, 2022. I agree with you, but I just think timing. I would say more like 2028, 2029, when Trump
well,
screws around with the interest rates.
so what I think we're going to see some hyperinflation. So I'm just, so people know, like, I am completely out of the stock market right now. I am
Fair enough.
completely out. I've got silver and I've got foreign currencies and I've got a little bit
Oh,
of
you play
crypto.
the forex market. It's very good.
I play the forex. That's where I live. That's where
That's your thing.
I've lived for years. That's where because to me that's if you're moving money to money, it's different. It's like to me that's where there's a
But you're on
reason why
basis of points. You're just doing it running on 4 points, 5 points, 6 points. I mean, you make your money based on that. It's very interesting. My father was in the forex markets too.
yeah,
Very interesting how
I
you guys
think
know.
yeah, between forex I think crypto's a great investment to trade in and out of. I wouldn't hold
I agree.
other than XRP, I wouldn't hold any crypto long
It's
term.
not an investment. In my opinion, right
No,
now, I don't think I
no.
can't see it to be an investment other than the fact that you are right. I think you use critical words especially for the viewers, so that they really understand, or you know, this XRP and this cryptocurrency like Bitcoin, the infrastructure, the rails that you use, the understanding of a highway, that is critical language that needs to be brought up when talking about cryptocurrencies and talking about like XRP and what it does
No.
to our financial systems. It's a faster way, like you said, to
A-
transfer wealth from one country to another around the world or whatever the case is, right?
And if you put your money into silver or crypto or gold right now, and if you're more heavily focused there, then just like Sunny, I'm right there with you, Sunny. I rent as well. I'm waiting. I cannot wait because when hyperinflation hits, when the economy hits, when the economy really gets rough, what's gonna be expensive? Meat and eggs. What's gonna be cheap? The land you walk on and the house you live in. Because nobody's gonna want their investment properties, they're gonna want to eat. So
Mm,
in times of hyperinflation, I mean, you have like all throughout the Midwest, all from back in the Depression era, there are stories of entire towns or entire cities along rivers being bought up for a few dollars because people wanted to eat. So, like when things get tight and rough,
I
when you
know.
go through a full economic reset, real estate and things like that, it's the people who have money and when there's blood in the streets, who have the
Yeah,
courage to buy when there's blood in the streets. Those are the
yeah,
guys who set their progeny for generations after them.
yeah. And I think you touched on a good point. That I already see the U.S. Housing market decline. I saw that last year already, and I think the bigger problem that's going to be facing in America. I think what's really interesting. I need to look at. I've heard that one of the Treasury secretaries or one of these government employees you have in America, they made a comment on CNBC last week that he believes the quality of labor and the quality of wage labor has gone up. And the reason why I think that's important to know is because who's going to be buying all of this stuff if your wages are only 18 bucks an hour or 15 bucks an hour? So he's saying that he's noticing that in America that you're seeing like companies actually offer 35 bucks an hour, 50 bucks an hour to some people. So I want to know if that's actually true and where the statistics are on
Mm.
that, the quality, and trying to and watch that. I think that's super
Yeah,
important.
be good to look
I
into.
think yeah, and I think the reason why, the housing market for both our countries are, declining is demand. There is no demand and if you don't have any demand, eventually there will be, but if your toothbrush is $9, eventually you're gonna have to keep dropping that price till you get to $1.50 till I come and buy it, right? So it's the
Yeah,
same concept with houses. And I think you know, it's hard to say with the US housing market in yours because you have people who are locked in 30-year mortgages, whereas in over here we're not. We're at 5 years, so we have to
mm,
make quicker decisions. So
yeah,
that there's not much of a pressure to sell because even if times are tough, banks aren't coming after you and saying, "Hey, you got to renew your mortgage." kind of locked in, if that's a fair statement. That's one.
Well,
But
and
I agree with you when times are tough. Hey, and hey, if you're sitting in a six-bedroom house and you don't, and times are tough, you can be like, hey, we don't need the six-bedroom. Let's go to a three-bedroom. But then that six-bedroom loses 30% of its value. What do you do, right? So I listen, I agree with you.
yeah, well, and then yeah, I was gonna say, yeah, no, it's really interesting. I was gonna ask you a question. It just slipped my mind here.
It's been late. We had almost pretty much an hour and a half here, so I think it's good. I think we,
Yeah,
there's some
I
things
think
that
I was gonna say, yeah. Any final thoughts for the folks before we let them go here?
um man, we really didn't talk any real estate, and guess what? That's my career. So I feel like, we should have talked maybe a little bit about that. But you know what? I love this conversation. It's just, there's so many things to kind of, talk about and unwind, figure out how we can make money. Um, you know, and just in regards to real estate, just because that the market's going down, that doesn't mean for you that you shouldn't buy or whatnot. I think everybody has to look at their own situation, and
Yeah,
like if I'm just getting married and I need a place to live, and I don't really want to rent because that's not my lifestyle. I want to buy, then you should buy, but I don't think you should over leverage yourself. For example, there's a lot of real estate agents out there that will say, how much is your budget? And you tell people, yeah, my budget, I can buy $1 million house. So they go right to $1 million. And that's over leveraged because, you only make $10,000 a month between husband and wife or whatever, and if your payments to live is costing you, 9,000 or 9,500 to live, you're not getting ahead in life. You're just
no,
break even, and it's going to get worse and worse if interest rates
yeah,
go up or something, or you lose a job, or they take a pay cut, whatever it is. So I think that you really should have that formula of your household expenses should exceed no more than maybe 30 to 40% of your income. 50% is even great. The moment you
yeah.
start exceeding 65, 70%, you start touching into unwanted territory, in my opinion, my experience. So
Well,
that's just,
and you make,
kind of my
yeah,
thought.
you make a great point. Like, I don't know if I told you, but I was a mortgage broker back in the day. That was my
Awesome.
past, one of my past professions, if you will. But
Mm,
yeah, I mean, that's when you give a pre-qualification letter, when you qualify someone, people are like, okay, how can I stretch that? How can I push that? Is that the most I can
mm.
get? Can I get from? I don't know. That's the wrong mindset. Like, what if I qualify for a $1.5 million house? Let me settle with an $800,000, $1 million house.
It's
Let me
so
let me
hard.
pull it back because why? Location, location, location. Be in a slightly different place. You can get the same amount of house in a
Hmm.
different location
Cheaper.
for 60, 70% of the price and set yourself up for success 10 years down the
Hmm.
road. Or, if you, it's, yeah, maybe it's not your dream house at this state in the real estate cycle, settle for something half of what your dream house is so that you can be in a position to get your dream house 5 years from now, So, no, I think it's
Yeah,
great
no,
points.
I totally I agree with you. So yeah, so maybe next time if there is, definitely would love to talk some more real estate.
I love
Definitely
it,
can
man.
share some more experiences what I'm having on my end.
Yeah.
I am seeing a downward pressure on the not just sales but the prices and the GTA. So we can talk about that and
Yeah.
kind of an outlook of the next 3 to 4 years. Because I'll be honest with you, I'd like to own real estate too, right? But it's just owning the right type of real estate, and
At the right
which
time.
side at the right time.
Yeah.
Timing is a huge important thing, right?
It's everything.
Um, you can buy silver today and sit on it for 20 years, and hopefully silver's $400 and you didn't have to do anything other than just sit and wait and make your money. But there are times where in that 20-year run, silver might go from 80 to 200 and then back to 30 and then back to 200. But by the time it hits 30, you might have to sell because you're retiring and you need that money. So it's all about timing, right? Like where are you
Timing
in
is everything.
positions? And timing is everything. And so, and last but not least, for the viewers, I am Indian. So I believe in these things called destiny and karma. And so sometimes, hey, it's not that you're a bad investor or you're a bad trader. Maybe it's just your bad luck or it's your karma that you deserve that you're not supposed to get this kind of gains or money. I don't know. Or maybe you are.
Well,
So
what's
don't
hilarious
beat
that if
yourself up.
It's hilarious that you mentioned that, Sonny. I always kind of joke whenever I hear anybody say, "Oh, karma's a bitch,"
Mm,
pardon the expression.
yeah.
Um, but anytime anyone says that, I'm like, "Ah, you just told me a lot about yourself." Because to me, karma's a sweetheart. So I love
Yeah.
it, man. Well, I
Yeah.
so appreciate you spending this evening with me, man. And
Yeah.
with
Hopefully we could
and
get Meyer to be on here more often or for a
yeah,
longer period. But it was good to hear from him too. And um,
absolutely. Yeah, and we'll
thank
have
you
to
so
have you
much
on
for
again.
having me.
Absolutely. Yeah, of course. Well, I
All right.
appreciate you, Sonny.
Happy
Appreciate your time.
holidays. Happy
Happy
holidays.
holidays.
Yeah.
Yes,
Stay
sir.
safe, stay warm, and we'll touch base soon. Okay. I appreciate it.
Absolutely. Take care,
Thank
Sonny.
you.
Thanks again, brother.
Bye.
Cheers.